One of the big questions is, what is money?
Practical purposes, it exists in a series of heterogeneous databases, very different databases.
Do you believe in crypto?
Digital currency may be an answer. It is the highly speculative asset.
I do own Bitcoin.
There is no second best.
Welcome to the Crypto Curious podcast. Every Wednesday, we dive into the dynamic world of cryptocurrency. If you're new to crypto, we recommend starting with our early episodes where we break down the basics and give you a solid foundation to understand the crypto world. And for the Crypto Curious, the seasoned addict or the industry insider, we're here to help you unpack the latest digital news. This week on the show, the 11th of October will always be remembered, a massive crypto crash. What caused that $19 billion bloodbath? Also, Swift has entered the blockchain game, but not in the way you think. Plus, also, we've got a new special segment for you. My name's Tracy, and I'm joined, as always, by my co-host, Blake, as we bring you all of the crypto news. Welcome to the show, Blake.
Thanks, Trace. Great to be back. Another crazy week in crypto. Just when we thought it couldn't get any crazier, here we are.
Mate, what a massive day it was last Friday, wasn't it?
Unbelievable. So yeah, let's jump in and unpack what actually happened in the crypto market.
Yeah, look, so last Friday, October the 11th, the crypto market saw one of the most violent days ever. Over 19 billion worth of positions were liquidated in just 24 hours. This was the biggest wipeout in crypto history. Bitcoin dumped from over 121,000 US dollars to under 104,000 US dollars. And Ethereum also dropped from 4,300 to just under 3,600. A lot of the alts were hit also quite hard, with Dogecoin and Cardano both briefly falling 40% in a single day. A lot of others we know were also hit. So at first, everyone blamed Trump's sudden announcement of 100% tariffs on the Chinese tech imports, thinking this had triggered panic across global markets. But once the dust settled, a much more complex story emerged, one involving a possible Binance pricing exploit. Now, Blake, you did some digging on this one and filled me in a little bit about this. So do you want to maybe let our listeners know what took place?
Yeah, this was crazy. Some coins were going down like 80, 90% of their values. So we call this a liquidation cascade. It kind of acts like a domino effect. Once you get these large moves, all of these leverage positions get wiped out and it causes the price to plummet incredibly quickly. And this has caused a lot of trauma as well across the ecosystem. There's a lot of horror stories, and I've even heard of traders taking their own lives in the last days, which is incredibly unfortunate. And a lot of people are pointing to, this issue that originated on Binance. So Binance has some tokens listed on their exchange. One that we've spoken about a lot, one USDE, which is a stable coin by Athena, as well as that WBETH and BNSOL. And these assets were used on the platform as collateral, or that you could use as a deposit for your leverage positions. And the interesting thing here is that Binance took the price of these assets from their own exchange, as opposed to aggregating prices across the ecosystem. And the reason that you'd want to aggregate your price from the ecosystem was what we would call, or an oracle, is that if there is an issue on one particular exchange, it doesn't cause industry-wide downstream issues elsewhere, because you're getting an average price across a bunch of different sources. And Chainlink, a project that we haven't spoken about much on this program, is a project that provides these oracles. So what happened here was that someone knew that there was an opportunity to exploit Binance. And if they dumped the price of USDE stablecoin, then it would potentially cause a cascading effect. So these people have dumped $60 to $90 million of USD stablecoin, bringing its peg from $1 down to 65 cents. And a lot of people had this asset as collateral in their portfolios as they borrowed other assets. And as a result, they couldn't meet their collateral obligations and they resulted in their positions being liquidated. And this caused a cascading effect. And it triggered around 500 million to about $1 billion forced liquidations almost instantaneously. And this was incredibly out of the blue for a lot of people and caused issues not just on Binance, but across the whole ecosystem.
That's really interesting, Blake. And as well as that, there was some type of attack. Someone had reportedly opened a $1.1 billion short position on Bitcoin and Ethereum on the Hyperliquid platform.
Yeah, that's right, Trace. It looks like someone knew that this was happening. They opened a massive position shorting Bitcoin and Ethereum, and I think they profited around $200 million within an hour. So this was 10 times bigger than the FTX collapse in 2022, which only forced about $1.6 billion in liquidations, and also larger than Luna. So this was massive because I think the market has realized that this has nothing to do with fundamentals, was more of a technical issue. We've seen prices rebound quite strongly over the past few days.
I was going to say it didn't seem to bother everyone. It happened over a weekend. Everyone was able to maybe go outside, touch some grass, feel a little bit emotional for a while and come back. And we really have rebounded quite well. Coin Ethereum off to the races again, it would seem. And I think the takeaway here is that it wasn't a stablecoin meltdown or purely the Trump tariff panic. It was more of a perfect storm laid out with those things that you mentioned earlier. The biggest exchange in the world, Binance, being exploited by some pretty sophisticated players that really had timed this quite well, that happened to coincide with this macro news. But again, look, they took some large amounts of cash away there. A lot of people did get cleaned up with those shorts. Again, leverage plays are always so risky, and it's a lesson as well to maybe not have all of your coins on the one exchange. While the $19 billion crypto crash stole pretty much every headline the last 4 days, another major story slipped quietly under the radar, and any other week it would have been the major headline. SWIFT, the network that moves trillions of dollars across global banks every day, just announced plans to launch its very own blockchain-based shared ledger. It's a massive move, not because SWIFT's going crypto, but because it's bringing blockchain tech into the heart of traditional finance. And it's doing it in a way that could reshape the global banking system's settlements of money, Blake.
That's right. So SWIFT is an organization owned by a bunch of banks, and it handles international settlements between the banks. And when you do an international settlement, you usually have to put a SWIFT code in. Now, there's been a lot of blockchains out there that want to disrupt this interbank settlement, but I don't think that these guys are ever going to hand over that sort of volume to a third party. They're always going to build their own infrastructure and maintain it because there's too much at risk here. So, yeah, what they've done here is that they've partnered up with Consensus. So Consensus is an Ethereum-focused organization that builds enterprise products, including MetaMask and Linear, which is a layer 2 blockchain on top of Ethereum, to build a proof of concept. So they've already onboarded 30 major financial institutions, I think some of the biggest banks in the world, to test it. And this just shows how serious they are about modernizing their infrastructure and ensuring that they're competitive well into this century.
And when you say they're not going to give away, that much that easily, what do you mean by give away that much? What kind of volume are they doing daily, SWIFT?
I think they're doing like $7 trillion of volume every day. So this is where international settlements happen through their rails. And at the moment, it takes days or even a week in order to get your international transaction processed, primarily due to many of the security features. No one wants these payments to go too quickly. So if there is something that's gone wrong, they can kind of stop it. Or if money's being moved offshore, there is a process there to pause that payment. But they've realized that if they want to compete with stable coins, they need to modernize their infrastructure. So they need a blockchain, they need to be able to have smart contracts and instantaneous settlement. So I think this is a massive move.
Okay, now a lot of people listening to this might be thinking they've heard the name Swift and they've heard it a lot when it comes up with the coin Ripple or XRP. So I ask you, Blake, is this a Ripple killer or is this helping Ripple? What happens here?
It's all, for as long as I can remember, one of the missions of Ripple was to provide for interbank settlements, and I suspect that this will reduce their value proposition in that area. I know Ripple's doing a lot of other activities, but a trend that I do see with these large financial institutions is that whether it's for securities, for interbank payments or remittance, they want to kind of build their own blockchains. They want to build their own and maintain their own infrastructure. There's no incentive for them to use public third-party blockchains that have your decentralized governance model, or even a centralized governance model. So, yeah, I think it's an interesting one for Ripple, and I think they're going to have to reflect that aspect of their mission.
Awesome. Well, look, this really is big news. And you talked about then just how big it was with 30 major financial institutions. But going further to that, Swift actually connects more than 11,000 institutions across 200 countries. So just shows how massive this would be, the huge implications across crypto and really the adoption across mainstream financial institutions there. So big news. And this was last Friday. And like I said, had it not been for the capitulation that we saw in the markets, this would have been the biggest news of the week, Blake. Okay, let's move on now. We would normally go for a break here, folks, but before we do that, we are trialling a new segment this week, Blake, called Scam or Legit, correct?
That's right. So we always hear about these mission statements of these projects that aren't necessarily the best actors, as well as that we hear these ambitious mission statements of some of the platforms that we know and love. So we're going to give you guys a little quiz, and you can head over to our Instagram to answer it. And the winner, they're going to get a little bit of Bitcoin.
They are. The winner will get $50 of Bitcoin. You must be a Bamboo user to collect your winnings, but you can, yes, as Blake said, head over to our Instagram page, take a look at our reels, drop your answer for a chance to win that $50 of Bitcoin. What have you got for us? Blake's come up with this one this week. What are our questions?
All right. Now, which one of these mission statements is a scam? A, our vision is to increase the freedom of money globally. Or is it B, it's our mission to provide you with a delightful and successful trading experience? Once you put your answer into our Instagram reel, you go into the running to win $50. We'll put it into your Bamboo account. And it's really hard to tell these ones apart, Tracy.
Both sound delightful. All right, A or B, folks, head to the Instagram page and drop your answer. And with that, we'll take a break. And when we come back, lots of short, sharp news bites. Here's Steve Smith buying a coffee. He's actually also investing in crypto at the same time, using Bamboo. You take care of drinking coffee with your mates, we'll take care of investing the small change. Start investing your change today with Bamboo. Welcome back. You're listening to the Crypto Curious podcast. Time now for our short, sharp news bites brought to you by the Bamboo app. I'll go first this week with news of the Nobel Peace Prize. Donald Trump didn't get a Guernsey this year. This one went to Maria Corina Machado, a vocal Bitcoin supporter. So this Venezuelan opposition leader was awarded the Nobel Peace Prize and publicly described as Bitcoin as a virtual means of resistance. So Machado told the Bitcoin magazine in 2024 that many Venezuelans have used Bitcoin to preserve value as their national currency collapsed and was in a bit of trouble. And she also said that Bitcoin was the future and plays a role in their national reserves. So, yeah, it's a nice touch to hear that the Nobel Peace Prize is also a Bitcoin bull. There you go.
All right. Next up, flavor of the month prediction markets. Polymarket has added Bitcoin deposits, so you can speculate now with your Bitcoin. And the New York Stock Exchange parent company eyes a $2 billion investment. So, Tracy, prediction markets, somewhere where degens used to hang out and bet on the weather. Now, the New York Stock Exchange is looking to invest $2 billion. They really see a future in this category. And I think it's going to inform an important part of the economy moving forward when, people can predict and put their expertise to work in order to predict outcomes of different things that are happening across the society. So New York Stock Exchange, it sees the vision and they want to be a part of it.
Some feels a bit off on that one, but yeah, interesting. Okay, up next. This one also feels a bit off to me. Trump is rumoured to hold $870 million of Bitcoin. And this is also amid the market turmoil, but that would make him one of the biggest holders of Bitcoin if true. One of the largest or private bag holders of Bitcoin anyway. And his son, Barron Trump, also holds, we've just found out, $80 million worth of Bitcoin. Now, he would have amassed that only recently, Blake, because I can't imagine, I know for certain that this time last year, he wasn't even a fan of Bitcoin. And I remember him saying that there was only one currency and that was the US dollar. So what a big turnaround.
What a big turnaround, and ladies and gents, what a time to hold Bitcoin. There's no better time to hold Bitcoin now that the US president holds over $1 billion Aussie dollars worth of Bitcoin. And I'm really excited about the next 3 years. Hopefully can he do a third term?
He will change the law, no doubt, so that he can. And and he'll protect his bags and he'll pump his bags.
He will protect his bags at all costs. Next up, MetaMask and Infinex have embedded Hyperliquid perps. So Hyperliquid is a derivatives exchange that allows you to leverage trade perpetual futures of Bitcoin, Ethereum, and other cryptocurrencies. And now they're fully integrated into MetaMask and Infinex wallets to give you a centralized exchange type trading experience. Now, this is a little bit more technical, but I'm a little bit surprised that MetaMask has done this, to be honest. This is more of a hardcore trading kind of avenue as opposed to their core product being.
Do you think it's a matter of having to keep up with the Joneses? They don't want to be left behind and.
Could be the case. They just have to give the people what they want.
That's it. Absolutely. Even if it means getting wrecked. Okay, next up. Trump is thinking about pardoning Binance's founder or original founder, CZ, and this is due to some business talks they may have together. So this is the reports that's been circulating for the last few weeks. Now, CZ did some jail time for months after he was convicted for violating anti-money laundering laws in the US. But at the same time, the sources claim that the Trump family is exploring acquitting CZ. So who knows what is behind these rumours and why this might be happening. But this will then potentially allow CZ and Binance to re-enter the US and start operating Binance there and become a larger player again. So we'll see what happens there.
Mate, if I was Trump, I would swap a pardon for listing of my USD1 stablecoin on Binance.
No, look, I'm sure there's many things going on with that deal for sure.
Next up, institutional investors plan to double their asset exposure in the next 3 years. So State Street, which is a large asset manager, and you've probably heard their name before, reveals that nearly 60% of institutions intend to increase their crypto and tokenized holdings over the next 12 months, which is massive. Already, they reckon they're going to double their holdings by 2028. So I think really great to see.
Yeah, just more capital flowing into the markets. And that's it for the show this week, folks. Hope you've enjoyed it. Hope you've got an answer for us for our little question that we gave you there before the break. Was that in fact a scam or was that in fact legitimate? Jump into our Crypto Curious Instagram page. But again, we'll be back with you next week with lots more news. Until then, stay curious, stay connected. You can do this by joining our Crypto Curious Facebook group or the Instagram page. Be sure to hit the subscribe button wherever you're listening to the podcast right now. And take a look at the Bamboo app if you're keen to dollar cost average into the market and take advantage of those dips and ups and downs. You can use the code CURIOUS for $10 of free Bitcoin to get you started. There's a link in the show notes below. Blake and I will be back with you next week. Bye for now.
Bye, guys.